I mean, as you guys all point out regularly, you can't ever pick or know when the bottom is going to be. So I think the question may be here, are we closer to the bottom than we are not? And I want to play the soundbite. This is from former Fed Vice Chair Roger Ferguson on Squawk Box this morning, talking about where the economy is heading.
The probability of recession in 2023 is certainly very, very high because of the challenge of trying to get this roaring inflation under control and having so few tools to do it and so little ability to control the supply side of the economy.
All right, so that's the take of a former Fed vice chair saying high probability of a recession next year. So in light of that, Tim, where should the markets be at this point?
Well, we're almost waiting for when getting bad data is actually an opportunity to buy stocks. And so when bad news is good news. And what Fed's Ferguson said is ultimately you have a case where you probably don't have the Fed backing you and have that Fed put. And in some sense, the Fed is ready to actually push the markets around. And possibly the sense is that they're willing to push the market. And I think you get a case where if you have a neutral rate that's higher than 250, this is a case where I think the Fed is really not afraid to push the economy around a little bit here. And that's where all the fear comes from. It is a very different Fed.
Yeah, and I would just say it's very unlikely that the S&P 500 bottoms out down 15% in what seems to be now a high probability event of a recession at some point in the next, let's call it, year or so. It's just not how it works. I mean, I know that bear markets, don't exactly have to correspond with the timing of a recession, but given the headwinds that we have, given the issues with inflation, given the speed in which rates have gone high, given the damage to supply chains, given the uncertainty with the geopolitical situation, given the surge in the dollar. I mean, I could keep actually going here. The S&P doesn't bottom out down 15% like that.
I think the other part of this, we're in the middle of earnings season, and what we're hearing from companies, that earnings, if you think about the efficiencies and the tailwinds for a lot of these companies and where the crisis, they were able to squeeze out a lot of inefficiencies in their business and plus buybacks, plus dividends. I mean, we've had a case where earnings probably were as good as they could be almost in any cyclical environment. And that's part of the problem. So you layer that on top of it. It always comes back to what do we think is the multiple you should put on stocks.